Hi, I'm back with Scott Smith from Cairns Finance, and hopefully you caught our video last week, which was all about interest rates. But if you didn't, you can head over to our YouTube channel. It's the Industry Estate Agents, and you can catch it up there. But thanks for joining us today. We're actually going to be talking today about what to do if you're thinking about buying a property in the next 3 to 12 months. This is relevant not just for first home buyers, but for people who might already own a property or have owned property in the past. So Scott, tell me, if I was thinking of purchasing something before the end of this year, what should I be doing right now to get organised?
Sure. Prior planning is really the key to it at the moment. A lot of people have probably read in the paper, we had the Royal Commission and other things there. Banks are looking at ways of not doing a loan at the moment. So we need to be prepared. We need to be clever about how we're conducting our personal affairs. And there's two main things that we're really looking at there. One is a savings pattern, particularly for first home buyers or people that are buying a property. Having those genuine savings, having those savings that have been built up over a period of time are really important to demonstrate to a bank, that's for sure.
Okay.
So that's number one.
So I've heard that things like your Netflix subscription and how often you get Uber Eats is something that the banks are looking at. Do they really care about that stuff?
They really do, yeah.
Really?
Amazingly invasive at the moment. They're looking at your bank statements typically over a 3-month period, sometimes a little longer, sometimes not quite as much, but they're certainly analysing every line of your bank statement. So things like Netflix, we need to declare those living expenses there. If you have to have Uber Eats 3 times a week, they're certainly cognizant of that. Gambling, your sports bet accounts and those sorts of things, regular alcohol purchases, all sorts of things now. They're really putting the microscope on you. So it's important that, that you're aware of that to start off with. And you're doing what you can to curtail that expenditure and prove to the bank that you can really afford that loan.
Okay. So if I was thinking of purchasing in the near future, how far in advance do I need to get all these things in order?
Well, as soon as possible, really. What we want to try and do, Heidi, is draw you a roadmap towards that property purchase or even that refinance. People with existing debts, we need to sort of adopt the same approaches when it comes to those savings and spending sort of habits. So typically a bank is going to look at it over a 3-month period. So 3 months out is definitely when we should have the conversation. But really, the earlier we draw that roadmap, the clearer it's going to be for you, particularly if we need to make some changes to your current spending habits and be more ready for that property purchase.
Okay, and so obviously you do mortgages. Is coming to see a mortgage broker something that's useful?
Well, I certainly believe so, Heidi. I'm a little biased with that.
What's the benefit to a customer if they come and see a mortgage broker rather than going to their bank?
Yeah, well, I think there's a lot of benefits there. And the industry at the moment is certainly generating more new loan activity than the traditional method of going to the bank yourself. About 60% of people now that are looking for a new home loan actually go to a broker rather than directly to the bank.
And just to clarify, is it free for customers to come to a mortgage broker?
Generically, yes. Certainly with Cairns Finance it is, that's for sure. I guess what happens is the bank pays us a commission for doing a loan if we're successful in getting that loan approved and settled. What the bank really does is share some of its profit with us. Because we're sourcing the new client, because we're helping process that loan and taking some of the work out of the process for the bank, they're able to share some of their income with us without it impacting in any way on the consumer. So you're always going to get the same or better loan than what you might get out of the bank directly. Okay,
fantastic. Well, that is very interesting, because I know I'm definitely one of those people who's guilty of using my tap and go quite regularly. So
a lot of people are, Heidi.
The banks are looking. Thank you for joining us today, and I hope that you tune in next week for our chat. We'll be talking about first home buyers and the changes that are coming up there with the new scheme coming out.